Welcome back, traders. Thanks for joining me here today. In the last video, you learned how to implement the top rectangular chart pattern for the continuation of bullish trends in the market. In today's video, you will learn how to implement the rectangular chart pattern for the reversal of a bullish trend and also for the continuation of a bearish trend. Before we proceed to how to implement the top rectangular chart pattern for the reversal of a bullish trend, I need to recall you about the important factors you must ensure as a trader before ever planning to implement the top rectangular chart pattern for the reversal of a bullish trend. These factors are: Number 1. There must be a signal of weakness in bullish momentum and a sharp bearish breakout of the support level of the top rectangular chart pattern. Number 2. The top rectangular chart pattern bearish breakout should be accompanied by a retest through the formation of a strong bearish price action candlestick pattern, such as the pin bar, bearish engulfing bar. Number 3. The broken support of the top rectangular chart pattern should strongly hold price as a new resistance level for price. These are the main key factors to determine the reliability of a top rectangular chart pattern for the reversal of a bullish trend into a bearish trend. It's time we study how the top rectangular chart pattern plays out in the market. Here's the daily chart of gold. As we can see, price made a bullish rally to this high. After the bullish rally to this high, price was unable to exceed this high. Price went through a medium of consolidation, thereby resulting in a top rectangular chart pattern. Here's the resistance structure, and here's the support level. Price made a long bearish candlestick breakout here. This top rectangular chart pattern bearish breakout meant all the factors needed in order to determine its reliability. Number 1. This bearish breakout was accompanied by a lower high swing here, which signaled weakness in bullish momentum. Number 2. There was a strong bearish candlestick breakout of the support here, and this signaled increase in bearish momentum. Number 3. There were multiple bullish retests of the broken support structure here, and it proved as a new resistance level for price. Number 4. The formation of a bearish pin bar confirmed the bearish setup. The best zone to apply stop loss in this bearish setup would have been at the top of the last lower high here. There are 4 take-profit methods to determine our exit point in this bearish setup. Method 1. Take profit can be applied through taking the measurement objective of the top rectangular chart pattern. To do this, we need to measure the price move from the support here to the resistance level here. Next is to replicate the price measurement value from the support here all the way downward. As we can see, it's almost close to the support structure here. Method 2. You can simply target the support level here as our take profit. Method 3. You could have implemented 2 risk-reward ratios. Method 4. This is for patient and swing traders. Swing traders would have to trail their profit to the top of each lower high swing in this market. The first swing level for tail profit would have been at the high of the second bearish pin bar here. The second swing level for tail profit would have been the high of the bearish engulfing candlestick pattern here. This is how to professionally approach the top rectangular chart pattern for the reversal of a bullish trend into a bearish trend. Now let's see how we can use the rectangular chart pattern for the continuation of a bearish trend. Take note, in a bearish trend, It's not necessary there should be a retest of the broken support of the rectangular chart pattern because the pattern is breaking out in the direction of the current dominion trend of the market. But in a situation whereby the bearish breakout candlestick has moved too fast, it's better to wait for price retracement. As we can see in this rectangular chart pattern bearish breakout here, the bearish candlestick was a long one. Trading this long bearish candlestick would technically suggest our stop loss in this sell setup should be at the last high here. As we can see on the trading chart, the risk in relation from the entry level here to the high here and to the next support structure here is too high. This is the type of continuation setup you should avoid. Since trading is a game of probability, it's better to stack the odds in your favor. Waiting for price to retrace to the 50% retracement level is another method you can apply in this type or market condition. Unfortunately, there wasn't a price retracement. Let's search for another example of a rectangular chart pattern that acted for the continuation of a bearish trend. Okay, good. Here's the formation of a bottom rectangular chart pattern at the low of this strong bearish trend. As we can see, after the aggressive bearish move downward here, price consolidated at this medium, thereby resulting in a bottom rectangular pattern formation. Study the size of the bearish candlesticks at this right-hand side here. We can see that the bearish candlesticks that formed at these zones are longer than the bullish candlesticks that formed. Now study the two consecutive bearish candlesticks at the support zone here. As we can see, the first candlestick closed to the support level. Also, the next bearish candlestick has a shaven close. Also, study the short two lower high swings here. The first short swing here proved this higher low swing here as a new resistance for price. All these factors here supported the continuation of this bearish trend. Whenever you figure this type of bearish setup, the market is telling you that there may not be a retest of validation. The best zone to apply the stop loss would be at the top of the short lower high swing here. You can implement the measurement objective or two risk-reward ratios profit target method.